Hello and welcome to the Morningstar series Market Reaction. I'm Emma Wall and I'm joined today by David Stubbs, Global Market Strategist for JP Morgan, to talk about what's going on in Greece. Hello, David.
Hi.
So we're here today to talk about Greece.
What
There
else?
has been a lot of movement over the last couple of weeks, months. This morning, European markets were up 4% because it looked like we had some good news. We looked like we were moving towards some kind of agreement. I spoke to someone recently who said that actually Greece doesn't need to do anything because it can reduce its 180% debt to GDP by just achieving 4% economic growth a year, which is what Spain is managing. What do you say to that?
Well, if only it was so easy. I think that 4% is a pretty aggressive growth target for any country, especially a country like Greece, which is seeing people leave, people emigrate, which has a lot of problems in terms of efficiency of its government, efficiency of its industry. That is a large collection of islands where it's hard to actually develop. So I think there's a range of issues around trying to get Greece to grow that level, not just for 1 or 2 years. We're talking about decades, and I think that that's a very aggressive assumption. It's hard to make the sums add up for Greece. Greece's debts being sustainable right now, and that's why I think something needs to be done on that, as well as some reforms at the country level.
I mean, they're stuck a bit between a rock and a hard place, not just Greece and the Greek politicians, but all those involved in this agreement. So, you have the two extremes of you give Greece a fantastic deal,
Sure.
and the contagion riskers, Italy and Spain, stick up their hands and say, we want that too.
Absolutely.
Or they leave.
Mm-hmm.
And equally, Greece and Spain stick up their hands and say, we want to leave too. So how does one contain the contagion?
Well, this is an incredibly difficult and complex issue. With losers on all sides, we've seemingly any outcome at the moment. I think certainly if Greece were to leave and suddenly this country falls apart, then some of the movements we've seen that are wanting to do the same thing around the other periphery countries like Podemos in Spain will probably lose support. The populations would see what happens. But equally, I think those populations would probably lose trust of their banks because they've just seen the Greek population have their savings converted into a much lower, weaker currency. And of course, that's all ignoring the geopolitics, right? You have Russia, to the east. You have the Middle East on fire as well. Is this the time, to break up this European project? That's all issues that the leaders are discussing. But of course, if you do what you need to keep them in, and you give some debt relief there, then a lot of other countries that have had a really hard time, the islands, the Latvias, the Spains, a lot of sacrifice there. They want a similar deal. So you see why the reluctance to move either way within the politicians of Central Europe.
I expect what will happen is there'll be a classic European fudge. The can will be kicked down the road, even for 2, 5, 10 years' time. And it'll be part of this renewed commitment in Europe to sustain growth. It's the same reasons that we've seen quantitative easing. Europe is behind the UK, which in turn is behind the US in turning the recovery into some sustained growth. Will Greece throw that off course, or do you think that Europe is on a one-way trajectory?
There's a lot of optimism about the Eurozone economy in general right now. I think that's justified. You're seeing a clear bounce back in consumer confidence, business confidence, activity, credit lending. The lower euro has helped, lower oil prices have helped. There's a lot of reasons why Europe is feeling good right now. But kicking the can down the road for Greece, it doesn't really solve the Greece's problem. Sure, it will benefit if the countries around it are doing well, but that's not going to solve this issue. So I fear if we don't solve it now, we're just going to be talking about it again in another few months, and it's going to cause further rising tensions. But I think investors need to concentrate on the fact that Greece is a tiny part of the Eurozone economy. It's not even classified as a developed country anymore. It's not in many indices that you or I would invest our money in, and therefore contagion into investors' portfolios should be limited, especially if they concentrate on some of the larger countries.
David, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.